Welcome to Business Reporter's Future of Financial Services campaign, hosted on The Telegraph Online. When people invest in shares or funds and the process breaks down, it can leave individuals open to financial and market exposure. By their very definition, these transactions involve different firms, and when things go wrong, they need to work together across teams, companies, and time zones to straighten things out. How can the financial services industry fix these issues quickly and avoid the risk of failed transactions? We're asking John O'Hara from Taskize to find a solution. John, thank you for joining us.
Hello, thank you for having me here today.
The press and trade publications of the world sing praises of Fintech. What more could we ask for?
I think Fintech is fantastic, but really Fintech is the icing on the financial cake. They've been focusing on bringing solutions that are good customer experiences and is essentially things that happen at the start of the deal-making process. Which trades should you buy? How should you buy them? And they've really left the heart of the transaction processing of finance alone, and they've built on the legacy infrastructure. And Fintech, we want to see Fintech make a change to the heart of banking to drive the efficiency there, and that's what Taskize is doing. So if you think about banks, there are millions of transactions that happen each day, and some percentage of those transactions go wrong. And when they go wrong, it takes people to put them right. Hundreds of thousands of people working around the world to fix these transactions behind the scenes. And as a retail user of banking, you won't see that. But Taskize is all about helping those people be more efficient so that problems are solved faster and that banking reputations are maintained.
Can you tell me what are the specific problems in a financial firm's back office operations?
I think for people outside the industry, it's difficult to understand how can there be problems. Things always seem to work in banking, really. But between the banks, the problems are very, very simple, but they cause tremendous disruption. Some examples might be that you change your account. You decide you want to move your corporate account to a different place, and you forget to tell your trading partners. Chaos ensues. Another one might be that you've mistyped an asset identifier. The identifiers are incredibly long numbers, and people get them wrong. Another example might be that a transaction arrives at your bank and it's one that you weren't expecting. That occasionally happens as well. There are dozens of ways that transactions can fail. And what's interesting is despite all the technology we have, when those failures happen, only people can put them right. And there are literally hundreds of thousands of people out there in the back offices around the world making these transactions flow each day. And it's not easy. And we want to really help that area.
Can you give me a few specific examples of process breaks that could happen in a financial firm's back office operations?
Well, I think that the transaction account change is an interesting one, because I move my account and say I've actually placed an order for an asset somewhere, and suddenly the firm that I've bought from is unable to deliver that asset to me. I've moved my account, they've got the wrong details, it's not going to arrive. And I was just talking to a friend earlier describing this, and it's as if you were at an airport and the preceding plane is late. Mm-hmm. And we all have had that experience where everything gets knocked out of kilter. So you just imagine what happens if I've got an asset coming and it doesn't arrive. Perhaps I actually owe that asset to someone else. I've got a collateral obligation or a repo. Now I don't have an asset, I've got an obligation. I have to go into the market again to buy it again. Perhaps I don't have the money on hand, so I have to borrow the money overnight to buy that asset. And now I've got interest charges. And the whole thing spirals, and suddenly the regulators might get involved and fine me for having misperformed. So the overall outcome is that you have a damaged reputation, you have poor client service, you've incurred costs, all because I didn't tell my trading partners that I moved the account. That sounds so simple, but that sort of thing happens quite regularly.
But surely banks and financial firms know what's at stake here. What's standing in their way to manage this internally?
That's a great point. And I think if there's just one bank in the world, there would be no problems. Banks are really very good at managing their internal systems. But every transaction is a transaction between parties, is a transaction between banks. And those systems are different, the people are different, the locations are different. So very easy for things to get out of step. And I think that the challenge of moving that entire industry forward, coordinating it all, that's a very, very big challenge. And to date, banks have focused on making money in the front office, but now the main profitabilities really left the industry, and people are forced to re-examine the efficiency in a much more profound way. And we want to be part of that process Taskize is making banks more efficient, especially when it comes to the people involved in this.
So how can you at Taskize help to do that?
Taskize essentially is about solving these breaks that happen. And when the people have to come together, find their opposite number in a different bank, and when there are thousands of banks in the world, and you're looking to deal with a different one for every single problem, how do you find the right person? How do you talk to them? How do you address that? That's not an easy problem. And that's the problem we solve. So Taskize brings the right people in the right firms, in the right job roles together very, very quickly so they can address those concerns in a secure environment. We're a network for solving problems in banks. And we're purpose-built for that. So that's what Taskize does.
John, who are the experts behind your solutions?
We've got experts from technology and from operations and from the industry involved in Taskize. From technology, we've got people from California who've done big science. We've got people from Seattle who've done cloud computing because our solution runs in the cloud, which is interesting itself. We've got operations people who've done stints in Hong Kong and London, and trading technology people from Europe. And in the business, we regularly meet with 14 different banks, and we've done this for the course of the last 2 or 3 years. They're really keen to see what we're doing, and it's great to listen to their input, and that steers what we're doing.
So say I want to implement your solution. Do my trading partners and counterparts need to implement it as well?
Yes, it's the classic you have to build a network problem. And that's partly why we're very pleased that we have Euroclear as one of our backers. I think that combination of a fintech firm with a more established industry veteran is a really good recipe, and I think you see a lot of people doing that. And that enables us to essentially grow our network much more quickly. Anyone who's a Euroclear customer can use Taskize at no charge straight away, and that's part of the offer that we have for them.
When you advocate making things easier, how do the regulators react? Transparency, anti-money laundering, know your customer, they're only becoming stricter and stricter. Are you not compromising transparency?
I think that the regulation question is always there. We are involved in perfecting transactions that have already been done. So the deal's done in the front office, and there is a particular interest in making sure that everything's above board and monitored correctly. But we're behind that process. The deal's been done, we're perfecting the deal.
And finally, finance is just becoming increasingly digitized and connected. What are the important trends to watch in this sector?
I think artificial intelligence, machine learning, that's the undeniable thing everyone's talking about now. And for banking, of course, all the information becomes more and more digital all the time. And if you look at what computers are good at, machine learning is what they're good at. And I think you'll see that type of technology applied to processing large amounts of data and drawing good enough inferences. And I think in the banking industry, that could really have an impact on how contracts are analysed and processed, how the regulators look at the industry. But I think it won't replace the need for human judgment. I think ultimately, in the final call, if you're settling a multi-million-dollar transaction, you need a person to put their eyes on that, because once these things have settled, they're settled. And I think that there'll always be a place for eyes on, for real human judgment right at the last step. But that whole process of analysing the environment up front, I think that's very amenable to machine learning, and we're going to see a lot of that.
John, thank you so much for joining us today.
Thank you so much.